After the taxation, what am I getting?
But I'm just trying to be devil's advocate there. Is it as advisable to take a borrowing against shares? What are the things you do to maintain your position in a stock?
Investing is like driving. I cannot drive a car by looking into the rear view mirror.
How many
Thing.
such stocks are there as part of your watch list? Today, I had amazing opportunity to interact with someone with 40 years of market experience in different avatars. Someone who started as a sub broker, then became a trader, then investing full time with lot of mistakes, lot of learning, and lot of wisdoms. So this face to face with Mr. Sudhir Mahajan is going to open your mind like never before. In this segment, which is the main segment, I want to understand the entire process which you're following for your investment. How did it start? Is the same process which you have been following, or it has evolved? So take us through that journey of serious investing, which you started in 2005.
No, see, I was always interested in, I told you, investing in as a thing, but but the trading mentality used to, not the mentality, the urge used to spoil those trades,
Yeah.
investments. So after the that one incident, I got into full time investing,
Mm.
and by and large, my this thing has remained the same.
Okay.
The investment strategies remain the same. I have not changed anything much. Tweaks here and there with timing and things, they continue.
Mm. Mm.
But the most important thing what I learned I was actually lacking was patience.
Okay.
I used to identify a stock pretty early and then sit on it, and then find a new idea
Mm.
and change over.
Mm.
And very often I lost a lot of multi-baggers that way,
Mm. Mm.
or I used to sell too early. That is something, I'll give an example.
Mm.
2005, 2006, I think, or 2007, I entered RT Industries at 28-30 rupees.
Okay.
It's been a multi-bagger from then,
Yeah.
with a lot of splits, lots of other stuff, bonuses and mergers and demergers. I, I got out of it at around 250
Mm.
and entered into Balaji Mines at around 30-35 bucks.
Okay.
And again, I got out at Balaji Mines. I had a very, very large position in Balaji Mines.
Mm.
This was around 2013, 2014. I got off that and I got into Rain Industries.
Mm.
So I was just, looking at my portfolio and just realized if I'd done nothing and just held on to my Balaji Mines,
Mm.
I would have been, much better off than what I am today.
Mm.
But that was one thing that taught me that, the most important thing as a investor is patience.
Mm.
You need to sit on a position, let it unfold over the years, and उसके बाद ही you can make money. Otherwise पैसा नहीं बनता है. You make very छोटा बनाते हैं, you make very small amounts, and you don't take the cream of the.
Yeah. Yeah.
I don't know, you've had this thing of going out too early.
Yeah, sir. I mean, pretty much we all are still very young to experience this. Yes, we are doing that mistake. Sir, a typical stock, let us divide that into three stages of the journey of a stock. The identification stage, the maintenance stage, and the conclusion stage, where you finally want to exit a stock. So, can we objectively, scientifically define what to do and what not to do in all three stages? Like identification, how do you identify these companies like Balaji Mines or Aarti? And how do you build that conviction of adding? Because you will add large position in a stock. You are not someone who will just add couple of lakh rupee and experiment, no? So how do you build that level of conviction and analysis to start building large position in any stock? What do you look at?
See, I first look at, I try to build up a story in my mind what this is going to look. For let me example, or let me talk about Balaji Mines.
Okay.
I read about it somewhere that as the uh, GDP of a nation increases and we grow richer,
Mm-hmm.
the consumption of amines grows crazily.
Okay.
And I looked at the Indian market, the Indian in those days in 2012, 2013, 2014, the amines market in India was about 2,000 crores.
Mm.
And I read somewhere uh, China was maybe 1,000 times bigger than that, or 100 times, something like that. So I looked at it that if I get into a mines company, and I looked at which is the best mines, and then what I found was, see, this is one thing which I always found very useful. I look for companies which have just finished some expansion and they have come down because of bad results because of the expansion or something like that.
Okay.
So I know that the expansion will pay a year or two later,
Yeah.
and that will also give the growth in the volumes and the profitability. So I try to find those kind of companies, and Balaji had gone through a similar kind of thing those days. They just started some expansion plans, and typically a company will take a couple of years to stabilize production and start giving it money, but the markets don't give it the time.
Okay.
So this is the niche time when I try to get into a company, and this has been right through and through for my whole career.
Okay.
So that's why I've been very very early in many of these companies and had to wait out for some times. Some of them have been phenomenal thing. I got into Garware wall ropes. Now I think it's called Garware Technicals at 50 rupees.
Mm-hmm.
And I've held it on for about 5, 6 years.
Okay.
Nothing happened.
Okay.
It was same 45, 55, 60. And then in maybe in a years or year and a half, it went right up to $1,000.
Mm.
So I had the conviction. I knew the company is good, and they were the world leaders in the fishing nets. So sometime or the other, people would discover things. So I've been doing this across the board, getting into companies where again expansions have happened, and they have not come into stream at so much, into the profitability stage.
Okay.
So then I went and met. I'd gone to Balaji Mines at Sholapur, met them. I met the MD,
Okay.
and he he just told me a simple thing. He says, only just one small segment of the mine market, which in China is a 1 lakh tons per annum business.
Mm.
In India, that is just the feed supplements for the poultry.
Wow.
Is just 1,000 tons in India, which is that gave me the this thing that this can be scaled up.
Okay.
And I had the conviction, and I kept thinking, but uh, what happened? It went up very very fast,
Okay.
and sometimes when shares go up very fast, when you're not expecting it to move so fast, you tend to get out early.
Okay.
So I got out around 200, 300 rupees and got into Rain Industries
Okay.
at 35, 40. Incidentally, I didn't get out fully out of Balaji.
Okay.
I sold about half my quantity, and but that was enough to fund my position in.
Okay. So just one question in that, Balaji. When you entered the position, um, You enter at one go or you build your position
You can never enter at one go.
okay.
I always enter over a period of 5, 6, 8 months because I never have that kind of money at to get in one shot. Very rarely happens that you have the money. So sometimes I take a position. It takes maybe 6 months, 1 year for me to build up my position.
Okay.
So
In that case, if suppose the price is going down, also you add. If the price
I keep buying. I keep. For example, now let me get back to Balaji.
Hmm.
I actually entered Balaji at 59.
Okay.
And it started coming down, and it was a small position initially because, and slowly I went on building till it came down to 30 when I really went berserk. 30, 32, 33.
And you were facing mark-to-market loss in your.
No, by that time I had given up my trading.
No, but still, sir, you will look at your profitability, right? I mean, when you entered at 59 and the price is 31, so it doesn't bother you. Your mental frame doesn't know that.
No, it doesn't. It doesn't trouble me.
Okay, okay,
It doesn't trouble me because I'm very convinced on the.
okay.
I was convinced on the stock, and see, another parameter which I look for is actually I look at the cash earning per share.
Hmm.
And that generally with the cash earning per share is high and the EPS is low.
Hmm.
It generally is giving you an indicator that some expansion has happened
Yeah,
and the money is going into depreciation and other things.
yeah.
So Balaji had a very high cash earning per share.
Okay,
So I look at this very, very carefully,
okay.
the cash earning per share, because especially if there's a divergence between the two.
Okay. So cash earning per share is basically free cash flow?
No, it's not. It's not. It is just the net profit
Hmm.
and the depreciation.
Okay, okay. So cash earning per share is then it's more of an operating earning, right, sir?
Sort of. It is. But you're removing the taxation and the interest out. So you're not taking EBITDA.
Okay.
So I just take the
And
retained earnings.
invested for further business expansion.
Yes. So that's what is going to be. So that can also, that's sort of free cash flows in certain ways.
Yeah, yeah, yeah. So
It's not.
earning per share minus. Sorry, sir. Please don't mind if I
No.
bother in the middle.
Please.
Cash earning per share minus capex is equal to free cash flow. Am I right, sir?
No.
Okay.
I don't look at free cash flows at all.
Okay. Okay.
I don't look at it at all. My thing is just this one thing:
Okay.
the cash earning per share and the earning per share.
Okay.
And there has to be a total divergence.
Okay.
The cash earning share should be very high and the earning per share should be low. And that is what is keeping the price low.
Yeah, that's true.
what,
That's true.
and that's what gives me I can enter shares at lower rates.
Okay.
Because most people look at EPS. I don't look at EPS so much as the cash earning per share.
Okay.
And that again will take into account प्रॉफिट आ जाएगा उसमें, retained earnings, सब कुछ आ जाएगा उसमें, and you can somehow you're getting it at a much better valuation. For example, there's this company we have been buying now for the last few months.
Okay.
The cash earning the कलकत्ता की कंपनी है.
अच्छा. Nice.
28 रुपए का कैश अर्निंग पर शेयर है, 10 रुपए का ईपीएस है. Okay, and the share is quoting $220.
So मैं प्रोसेस को एक बार रिवाइज कर रहा हूँ, तो मैं नोट बनाता जा रहा था, आप जैसे से बोल रहे थे कि you make a big picture in mind, story in mind, where market size, growth of the market, international reference, for example, China, and companies who have just concluded expansion through their capex. Then you meet the management and try to gauge.
I don't try to meet managements till I build up a large position.
Acha. Because management will also not be interested in meeting if you have no positions, right?
Yes, that's one thing. And next part is now, for example, now let's talk about the company which we just mentioned.
Yeah.
I could talk to them and they gave me much more, they took it seriously rather than
Ah, ah, ah.
just last week we had a Zoom call with them.
Okay, okay.
So again, they take you more seriously if you have got skin in the game.
Yeah, that's true. That's true.
And if I'm going to go with what the promoters are going to say, I'm going to be a fool
Yeah.
without having my own this thing on it.
So promoters will always be bullish about their stocks.
Absolutely,
Huh?
absolutely.
So how do you, still keep your mind in a calm mode? Ki you take them as a pinch of salt, or you don't give very high weightage to their judgment about their company.
See, again, depends on person to person.
Hmm.
One of one of the best investments of my life has been HBL Power.
Okay. Hmm.
I built up a position, a large position,
Hmm.
and I was not able to talk to the management because he doesn't meet anyone.
Okay.
After a year or year and a half, I got to meet him.
Okay.
And I realized that he's one of the most intelligent persons I have met in the last 40 years. And, his what actually got me, it's a very nice story about how I got invested in HBL.
Okay.
In 2007, 2000, I bought a company called Seshasai Paper.
Okay.
And around 2017, 2018, I was still holding it. One of my friends said, let's go for the AGM.
Hmm.
So we went for the AGM to a place called Erode. It is close by to Bangalore.
Hmm.
हम वहाँ गए थे, went for the AGM, and then I was talking to the financial CFO, and I asked him, what are you have another company, what does that do, and all that.
Hmm.
So that was a company called High Energy Batteries.
Okay.
So they were making batteries for defense. So he explained it to me. I came back home, read about it, and I invested in it. I made some good money in it.
Okay.
Okay, we entered at 250 and sold at maybe $1,000. I don't remember.
Okay.
But I had gone again. I was attending this AGM of this company, High Energy Batteries,
Hmm.
and I asked him that you are into this defense things. Who's the big daddy of this industry?
Hmm.
Tell me HBL Power.
Oh.
It's you. And then I got hold of the annual report. I read it, and what was very very fascinating about that annual report was all the information you required was there in the annual report, but it was not in one place. It was in like a jigsaw puzzle. So if you wanted to get the information, you could get it, but you had to read it through and connect the dots. Because of it was the person, and then I attended the AGM,
Hmm.
and Dr. Prasad starts off. We are a technology company. We are not a battery company,
Wow.
and that got me hooked. And then I saw that they are in the railways, they are in the defense. By the way, I was one of the earliest guys into defense.
Okay.
We got into defense very early, but I made a big mistake. I ignored HAL and BEL
Hmm.
for only one reason. They're both Bangalore-based companies,
Ah,
and you hear a lot of rubbish about them.
yeah.
So it was this is the price I had to pay for being close to these two companies. BEL is very close to my house, by the way.
Okay.
So I knew a lot of the people working there and all that. So I, I could never ever, you know, get mind changed. So
So
this is
being
another thing I've learned now, that you need to keep that biases away from investment decisions.
so being close to the management or the company could be disadvantage. It's better to have a framework conviction in your own mind and then meet them to
Yes,
get some useful more further
yes,
insight.
and that is what can then reinforce your story.
Hmm.
You can you can get to talk to them, what you are talking about.
Hmm. Hmm. Hmm.
And maybe if they are talking in the same direction like what you are looking at things,
Hmm.
things can be, go much faster,
Hmm.
which is what we need to do. Otherwise, if I just go and listen to the management, he'll tell me this, that, and no management is ever going to say that, we are not going to do well.
Hmm. Hmm.
How many managements have given a profit warning in the last 5 years? I can only think of one company, HBL Power.
Okay.
Hmm?
HBL Power has given profit warning.
They gave it in June.
Okay.
But again, he he has said something very, very thing. He's a profit warning because I'm not getting the orders.
Hmm.
So where do you find managements which are so honest today?
Did you exit the company?
I have not exited the company.
Even though
I
there
have
is
showed,
profit
sorry,
warning. Even though there is profit warning.
absolutely, because the his product, the Kavach, the unfortunately in the last so many months, there's been no orders released by the government.
Hmm.
So how long can they hold back the orders?
Hmm.
Most of the orders have now going to be released in the next month or two.
Hmm.
But as a dutiful management, he has said that I don't have orders coming in.
Hmm. Hmm. Hmm.
But can I, as an investor, get out of it just because of that? I can't, because I can't build back my position.
Yeah. Yeah.
The impact cost will be too high.
That's
And another thing, we all should realize that we have to take into account the tax,
hmm.
the the, the implication of the taxation on a thing, that if I sell a stock
Hmm.
and expect it to fall by 20% and then buy it back after the taxation, what am I getting?
And
Yes.
now in the era of algo trading, where the moment you with a large quantity show intention of selling, your impact cost would be much higher plus tax whammy on that.
And if you're trying to buy it back again, you're going to get an impact cost.
Yeah, yeah.
So I sit through these kind of things
Okay.
because that's the only way to offset this thing. And as a individual investor, I can do it.
Yeah,
But as a fund manager, I cannot do it because people can question you, why didn't you?
yeah.
Being individual investor has got a lot of charm. I
How
can
how
take
do you take care of recurring incomes? Because these are shares which you hold forever. So how do you make how you live your life, maintain your lifestyle? Is it through the dividend income of these companies?
no, it's not that exact thing. The dividend incomes are pretty large, also. But the whole thing is, I have realized that my money comes in spurts.
Okay.
So I actually have a line of credit.
Huh?
I have a line of credit.
So you borrow money to invest in stocks?
Absolutely. I'm always invested 110%.
That's interesting, sir. Is it a stock against another stock? You take a loan against the security and invest in some other stock?
Yeah, I take a loan against securities,
Okay.
and that also takes care of my expenses for the month, and
Oh,
also the new investments. If I don't have to wait for, so this way I don't have to sell something early.
I'm sure you, but when you're doing it, it's obviously logical. But I'm just trying to be devil's advocate that is it as advisable to take a borrowing against shares? What if the stock price of the one which you have bought against leverage goes down?
It happened to me in 2020.
In
I
the
think we
how,
mentioned it.
how much leverage you were in 2020?
I was leveraged to the tune of about 50%, 60%.
50-60%. That means 100 stocks. If you have stocks worth 100 rupee, you had another 50 leverage. So your total exposure was 150.
Yeah.
So, and market was crashing. So your mark to market loss were also
Yeah,
there.
I got wiped out in 2020.
That,
I
I
was
mean,
wiped out.
Even though you got wiped off earlier, you learned from that mistake, but still you did a mistake in 2020. So mistakes will happen.
Mistakes do happen because what I did a very concentrated bet on a couple of counters.
Oh, acha.
And it was just 3 counters or 4 counters, which was not the right way. And because of the high leverage and it's a bad time to remember, but okay, I have to go through it. Leverage is good as long as it is manageable. So what I have realized now is you need to have a leverage of about 10%.
Okay.
So that is manageable. If
Okay.
anything goes against you, you have alternate stocks to put in,
Hmm.
or you can, get out of it and without much thing. But this 10% is what is I'm comfortable with.
Okay.
And I don't advocate people, investing, on borrowed funds.
Okay.
And especially, trading or, FNO on borrowed funds is no.
Oh, that Fino is anyways already a borrowed money, and on top of that, borrowing further to that borrowing money is
Yes.
multiplier impact.
Yes, that's what I'm saying.
Okay. Okay.
I don't do FNO and all that on borrowed funds.
But you do FNO.
I do a little bit of FNO, but that is on stock basis. I never do anything on a index base.
Okay.
For example, I was buying Vedanta some time ago,
Hmm.
around 250, 260, 270. I was not having sufficient funds to buy a large position.
Hmm.
So I bought a lot of stock in FNO, and slowly as my liquidity improved, I converted it back into
Okay.
the physical. So I use the FNO only for that, and it's more the futures rather than the uh, options. The futures, if you are a good stock and you can pay the mark to market, I think you can get away with it much easier.
Okay. Okay. Sir,
So this is uh, the thing that but everyone wants to do options.
yeah. But
Let's say
future,
some
you limit yourself to only limited number of stocks where derivative is there. But you're
no,
right.
not necessarily, not necessarily,
But how
not
do you
necessarily.
take position in stocks where derivative is not there? It's a leverage position.
And I just buy as and when the money comes in,
Okay. Okay.
as and when the money comes in.
You will not borrow share money from market against the share to buy some other share with a high leverage.
As long as within the 10%.
Okay. Okay. And this is beyond a derivative position.
I don't have the derivative positions are minor compared to this whole thing.
Okay. So, I mean, if suppose 100 is your total financial investment net worth, I'm presuming that you don't have real estate, etc. Now it's mostly
No, I don't take into account the real estate at all.
okay. So, out of 100 financial investments, how much is derivative and how much is cash?
10% would be
Derivatives.
no, 10% would be loan against shares,
Okay. So that's 110 now.
and maybe in that 100, in the first 100, 2 or 3 maybe less than 2 would be FNO, maybe
Okay.
less than 1.
So FNO is more for being active, doing
Yeah,
something.
it's a bridge. It's a bridge
Okay. Okay.
that, I am expecting money to come in the next 1 month.
Okay.
I want to, and that particular share has it.
Okay.
And generally, I'm in small caps and mid caps where it's not in FNO.
Got it.
So the only two large caps I'm in is Vedanta and Indus.
Okay. Okay.
So they're the only two derivatives I have.
Got it. So, sir, I'm coming back to your process. So, we have discussed the first part, which is identification of stock and how you build conviction and build positions. Now, let's come to the second, which is maintenance. That you track the stock by attending con calls. What are the things you do to maintain your position in a stock?
See, the most important thing is I don't look at quarter to quarter earnings much.
Okay.
I'm not a numbers man. I'm looking at the direction of the company's taking.
Okay.
As long as the direction is okay, in my view, I will stay invested in it for even couple of 5, 10, 12 quarters without the numbers really coming in. But the direction is what I've already got in my mind. I want it to be going in that direction.
Okay. Okay.
So it's a and talking to, the AGMs. This year I have only attended one AGM.
Oh, out of how many stocks?
See, my core holding is about 10 stocks.
20 stocks. Okay.
10 stocks.
12 stocks only.
10 stocks.
Oh my God.
So out of that, I've only attended one AGM.
So why is it so? People say it's investment for an investor is very important to attend AGM.
I don't generally, somehow I don't think there is much information coming in generally from these things. And I told you, I'm not a numbers man. Most of even the con calls, I try to avoid the con calls by and large. Because see,
How will you judge the management, sir? अगर आप
I do. Actually, it's like this. I attend one or two con calls and I see how they're performing and
okay.
what they are. And then, if my this thing about the management is good, it's not going to change much. By hearing them you have the presentations. Generally, they talk on the presentations. Glance through the presentations and you know what's happening.
So you will go through the quarterly submissions of the companies.
I go through them, but it's not that I'm going to go the fine comb and try to find I'm looking at. I told you the direction. Okay, there may be a quarter bad, and see, you can't look at investing is like driving. I cannot drive a car by looking into the rear view mirror. I have to be looking at the screen, the windscreen, and what's there in front. अब जो हो चुका है. The management may have been bad. There could have been some problems. But can I go on giving more emphasis on that rather than what's ahead of me? So it doesn't make sense at all to keep looking at the rearview mirror. Same thing. I don't pay much attention to even Excel sheets.
Okay.
Because I'm looking for the J curve coming in. I'm not looking at a linear.
And J curve will not come in Excel sheet.
It's not going to come in Excel sheet. Huh?
But how do you make that judgment of a J curve, sir? It may come after many years also. You have
No,
to...
but see, that's what I told you, that I'm going in for companies that just finished the expansions and so there will be a J curve coming in.
Got it.
Common sense,
Got it.
isn't it? There may be a quarter here or there.
Yeah.
You'll suddenly see a bump up. So you can't get a J curve on an Excel sheet. You can only get linear.
Yeah.
And I'm looking for the J curve. That's where they'll make your money.
Sir, in that case, you will invest in startups who are spending heavy money on incurring initial losses, probably because
Not particularly. Not
No?
particularly.
Oh.
I've unfortunately, when I've invested in startups, I've lost.
Okay.
So I don't understand them properly. So what you don't understand, you don't
So
invest in.
you'll want to be investing more on old economy where the real capex is visible and the J
Yes.
curve is probably going to happen.
So that is very important for me. And I need to have a very important thing. I need to have that industry going to do well.
Yeah.
So, for example, now HPL Power, I looked at it like this. When the internet thing started, what was the thing was invest in the courier service rather than I don't know if you remember that.
Yeah. Yeah.
So I look at it like this. In defense, the most important thing is going to be the battery.
Yeah.
So I looked for a battery company, and everything came in. I told you that high energy battery thing and everything worked out, and I found this company. Then I found that they're into this railway thing. And what was the most interesting thing about this railway coverage of theirs was they spent 10 years and 400 odd crores in R&D expenses,
Hmm.
which had been expensed.
Hmm.
Which company, very few companies expense their R&D expenses,
Yeah.
especially when they're not got.
Mostly they want to capitalize. They don't want to damage
Yes.
the PL account.
Yeah, so this guy took the hit on the balance sheet,
Oh.
10 years, which is, says a lot about the quality of the management.
Yeah.
And I, s- I think he's a wonderful person. It's really sad that he's 77, 78. He would have done much more for the country if he was 20 years younger.
But I'm sure he has great successions and the company may
Yeah, but
do well.
the company is good. He's got the whole thing done up. Everything's very good.
Yeah.
But he's he.
Yeah. True. So let's
I
go.
love to meet him. I love to meet him.
Oh, you have not met him.
No, I love to meet him. Every
Oh,
time
yeah.
I meet him, I learn something new.
Yeah.
And all these 40 years, I met lots and lots of people. The only guy who's comparable to him is Nandan.
Okay.
I met Nandan a couple of times.
Ah.
Nandan Ankani. I think this guy has achieved more than Nandan because Nandan had a big organization with him.
Yeah.
This guy didn't have that organization.
Okay.
And today, 90% of Indian missiles are with his batteries. 80% of the Indian Air Force. He has his company has designed and manufactured the command console for the submarine, the Scorpion submarine,
Wow.
and he supplies the batteries for the submarines. He supplies Israel and other places with the batteries for the missiles. It's not a simple thing, Designing a battery for a missile is totally different than an automobile battery. Incidentally, he failed in the automotive sector.
Hmm.
The batteries he couldn't do it because he's good in niche areas.
That's true. So let's go to the third stage of any stock, which is the conclusion or destruction stage, where finally you decide, ho gaya, we niklo yahan se. So how do you identify a stock which is done and you want to exit now?
See, ideally, I would like to hold on to most of the shares I buy.
Yeah.
But then, you have many more new ideas coming in.
Hmm.
And that's one thing. And the next part is sometimes what happens is you have come through that initial J curve thing, and you're coming back to the linear stage of the company.
Yeah.
I like to get out at that level very often.
Okay.
And then I have a very simple system. I look at a new idea and visualize what this share could do
Hmm.
in the next 3 to 4 years.
Hmm.
Then look at my portfolio and then try to weed out the company which can't meet this
Hmm.
expectation. It's a simple but very effective way of doing things.
Right. So you
I
also
think
finally you will go into the elimination mode. rather than
elimination, that's it.
selection mode.
That is it. It's not that the company may be bad,
Yeah.
but if this is going to do 5x and this is only going to do 3x, in my view, it's better to take out the 3x and go to the 5x company. So, and that's the only way to keep sanity. Otherwise, I keep buying everything. Where do I sell? I know by and large, my whole philosophy is very simple. If you may have noticed it, it's no great rocket science but it has worked.
Sir, Burj Khalifa looks very simple, but what has gone inside building it is quite complex. So it's just that you have spent so much time in doing wrong things in market that you know what are the right things to be done.
Yes, what you say is correct. And see, with so many years, I don't have to spend the same amount of time trying to understand certain things. Reinventing the wheel, I've already invented and reinvented the wheel many times for myself. It doesn't actually make sense. But as I said, what takes me 2 minutes to understand would take somebody else uh, much longer to understand. But that's how you all evolve as investors.
Yeah.
All of us evolve like investors like this. I don't think there's anyone who has, has got the same way across the thing,
Yeah.
starting from day one. No way. We make our mistakes. We need to learn from them. Make new mistakes. Hopefully, we make less mistakes than
The previous.
the good ones. And ultimately, in investments, they will always, if you can, you can never have 100% track record. You make some terrible mistakes. I made a terrible mistake some years ago.
Hmm.
I invested in a company called Syntex Textiles.
Yeah.
You have heard of it?
Syntax name is quite a known name, but I'm not sure it's the same syntax.
No. Actually, what happened? Syntex demerged into two.
Oh,
One was the textile division and one was the plastics division.
okay. Okay.
Everyone knows it because of the plastics division. But there was this textile division which was very, very good.
Hmm.
In fact, it was housing the world's largest single location spinning mill
Uh,
of nearly 7 lakh spindles.
uh,
And but everyone was telling me management is not good, management is not good. I didn't listen to them. I said, you got such a gold mine of a even China doesn't have this 7 lakhs in one location. And this location was right at Mudra and Mundra. Everything was perfect. But they were able to run it to the ground.
hmm.
I had bought this share at 20 rupees. I sold at 60 paisa
Oh my God.
and huge volume. Huge volume. But see, we make I'd gone for the AGM and something was telling me what this guy is saying is not making sense. But the pig-headedness I had was that no, अभी 7 रुपया है और कहाँ कितना गिरेगा.
How
But
many such mistakes you have done, sir? Approximately.
this was one of my largest mistakes.
Okay.
You know, see, you make some companies, you get out. I can't say that it's 100% always right. You make our mistakes, we get in. See, another thing what I do before I invest in any share is I have a pipeline, of shares.
Hmm.
So whenever I'm interested in a share, what I do is I buy a small quantity so that it remains on my screen.
Hmm.
And after looking at it for some time for 6-7 महीने देखो, you come to know क्या हो रहा है, and you then, because it's there on the screen, any news about it, you also look at it.
Hmm. Hmm.
So then you start getting familiar with that thing. And in many times you then get out of this, you say, no, it's not meeting your criteria. You get out of it. So that's what actually is this separation
How many
thing.
such stocks are there as part of your watch list?
Maybe 10, 15.
10, 15. And those are typically the ones where you have invested, or you have some?
Yeah, all of the where I have very small investments
Okay.
so that they come onto my screen.
Okay. So 10, 15 stocks in your, passive list, and 10, 15 where you have actually invested big amount.
About 10 companies would be where I invest.
Okay.
So maximum the whole universe will be 20, 25. But these 10 counters would be 95% of the portfolio.
Okay. Got it.
And the rest would be like 5% or even less. And if you look at it, my top two holdings would be nearly 55% of my holding.
Wow. Very-
55, maybe 60%.
So this has become big over a period of time because of the price appreciation, right?
Part of it is price appreciation and part of it in spite of pruning.
Okay.
I kept on pruning my largest position
Hmm.
so that it doesn't go above 30-35% of my portfolio. Because I think I got hit very badly in 2020, where my largest holding was nearly 65%,
Oh my God. And you had leverage also.
and leverage also on that.
That
So,
was invitation for trouble.
absolute, absolute. But if COVID had not come, I would have pulled it off.
Yeah.
Think about, you win some, you lose some. Hmm.
Amazing, amazing, Sudhir sir. Sudhir, it was great interacting with you. I think the way you shared your experience, your your philosophy, and I think I've been able to get what I wanted from you because you.
What were you looking?
I was looking for an absolute this wisdom sharing where how you deal with all the three stages of stock. Because it's very easy to talk about only one thing, how to identify stocks, but I think all three needs an equal weightage, if not more, in the last stage. But it was great interacting with you. It was
I
fun.
think one thing we need all to learn is patience.
Yeah.
And what little patience I've learned it from one of my good friends, come Guru, Govind Parekh.
Oh yeah. Uh,
Have you interviewed him?
Not yet. I hope I'll show this interview to him one day and tell him that I want you also one day.
Now, Govind is incredible.
Yeah.
You know, he invests in shares and holds on for 20 years and plus at a time.
Yeah.
I don't think, I have that inside me, but I've tried to, now I'm trying to get into that kind of thing, but it's still very difficult. So, you have to learn from Govind Bhai.
I mean, I have a confession, sir. I started my career as a trader, very active trader, then moved to become a passive trader, now momentum investor. And my aspiration is to become someone like you who is so patient and taking position, large position in few stocks and holding on forever. So you are aspiring to become Govind Bhai, I'm aspiring to become you. So that's the beauty of stock market. All of us
That's it.
aspiring to
See,
become big.
Govind Bhai is a legend and such a humble person, unbelievable. And he's ready to impart his knowledge. I just met up with him some time ago, and I was impressed. Again with this thing, humility. If we could all try to get his kind of humility, it would be phenomenal.
That's the definition of greatness. Thank you.
Thank you.
Thank you, Sudeep, for this
Thank you.
amazing session.
Thank
Really
you.
loved
Bye.
interacting with you, and please allow me to stay in touch with you. And
Anytime you have my numbers, give me a call.
thanks a lot.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.